Well, g'day there traders and friends right around the world. Thanks for joining me on this second video as at the close on Monday afternoon. What I wanted to do in particular is just address some of the broader market weakness which is really showing up on a lot of heavily followed securities on the US equity markets. If you're looking for just an update on the three US markets and also a recap on that stellar silver trade which we got into today, have a look at the previous video. That will give you a feel for the actual market, what the market is doing, and of course a recap on that particular silver ETF trade, which is working out very nice for us at the close on Monday afternoon. This particular video, once again, just addressing the broader market issues on a lot of stocks, or at least on 4 stocks: Target, Starbucks, HD, and also Gilead, as at the close on Monday afternoon. It hasn't really shown up on the markets yet. I mean, you can see all of these dark clouds starting to form in the distance. We haven't seen, or it hasn't actually started to rain yet. This is true for a lot of individual stocks as well. You can see the reversals, or you can see at least the slowdowns and consolidation starting to take place in the way of price action, but we haven't really seen the true correction. This is what this video is all about today. In regards to Target, what I'll do is just address some of the big points which I'm seeing on this particular stock, and why, if you're holding Target at the moment, you should be a little bit careful and cautious as we move into May 2015. First of all, you can see that if I zoom out and have a look at Target, we've been in some form of an ascending wedge. No matter which way you break this down, it is an ascending wedge, and it is the perfect time frame for an ascending wedge. Not only on that, we've actually broken out of it, and when we saw the bearish breakdown, which of course the chart pattern suggests, you can see first of all the expanding volume in the way of the sell side. Now that's okay, it's starting to show us that look, people are starting to see this. What is most important at this particular juncture is that this is what we call a bear flag type of trade setup. You can see that we're starting to rally. The volume hasn't really been supporting the bullish movement higher, and even on Monday and Friday's trading session, we're really starting to see again the reversal start to show up, a little bit of expanding volume again on the sell side. This is a trade which we've been covering for weeks now, and it really looks as though in price action suggests at least that it's going to resolve itself to the downside. I'm not saying go ahead and place an 8081 real trade. Do it in a virtual account. Have a look at this particular trade. It's not one of my go-to stock selections for the week ahead, but I can definitely see weakness in this particular stock, and even see Target, I mean, over the next couple months, trading as low as about $77 a share on the daily price action. Keep an eye on Target. I think a lot of people are going to be surprised with just the overall weakness in this particular stock. On top of that, on top of the actual ascending wedge, on top of the bear flag which is starting to set up and potentially break down, I've spoken about divergence setting up on a lot of stocks. Now this is more so outside the 1 week time frame. I've been referencing this for months, literally months right now, and if you go back and have a look at where price is right now, here we are going back to mid-March. We've essentially been flat for about a month now, and we're starting to really see those clouds really form and say, look, that the rain, or at least the storm, is about to hit on Target. Pay attention to divergence. It's not only showing up on individual stocks, it's also showing up on the broader market indices as well. When we speak about the Dow Jones, the Nasdaq, and also the S&P 500, it's also very prevalent on these three markets, and again, it's translating through to a lot of these individual stocks which are heavily backed, heavily followed, and have a big presence out there on social media. Starbucks at the moment is another individual stock. You can see that we had an earnings announcement. It came out on the Thursday last week, a big gap up into Friday's trading session. Today we've more or less negated that Friday intraday price action. You can see that we've got what we call almost the bearish engulfing pattern. It's very close to what we call the one black crow as well. What is most important about this is that we're actually at resistance. It's one of those stocks which I've been following on and off for a little bit. I've made the argument for a symmetrical triangle, big volume surge into the earnings or because of earnings, but today it's a completely different type of chart pattern and trade setup. It could have been a gap and go type of trade, but I mean, honestly, if Starbucks starts to pull back below 50.51, you've really got a nice gap trade down to about 49.73. Personally, I won't be placing this, and I do not suggest that you do this in your own trading accounts. Make it a virtual trade. There are much better trades in our Pivot Point Pro analysis list for the week ahead. I'm just working with the price action, of course, what this individual candlestick encompasses and really suggests for price action moving forward. Pay attention to Starbucks. It's also another stock which has shown strong divergence as well as prices made those higher highs. This MACD and all of these other indicators at least are suggesting that, look, be careful. Exhaustion is just around the corner on this particular stock. And I mean, there's been so many dark candlesticks as well saying, look, be careful. We've toyed with that 50 exponential moving average on and off for about a month now. Earnings has pushed it higher. Is this going to be an exhaustion gap? This is the most important part. Is this an exhaustion gap? gap or a continuation gap. Only time will tell, but on today's candlestick, it really suggests that we are going to see at least that gap retest on Starbucks. This is the third stock, and again, I haven't changed any of these triggers. I've been back and forth with a lot of people around the world who say, look, what are your thoughts on this particular stock? I'll always give you my thoughts. I just find it interesting that we've had this 110.89 trade trigger set here for at least a couple of weeks right now. Even this 116.48 trade entry, and look at today's price action, a big sell-off on the individual daily candle. You can see here down $2.31. It's essentially taken out the previous 6 days candles going on from Friday, the 17th of April. Here we are on the actual 27th, and 10 days later, and this one particular candlestick today has just written off all of the gains or the slight gains which has been made during that time frame. We're sitting right on the edge of this breakdown right here. Again, a lot of weakness. You can go back on the YouTube channel, and I even mentioned this particular candlestick right here. This is what we call an exhaustion gap. So when I speak about Starbucks gapping up and seeing a candlestick like this, it does take time for the price action to actually reverse. You can see, for instance, on HD, it's taken 1.5, almost 2 months for the price action to finally resolve itself in the initial direction, which I spoke about going back to late February it was. Now that's a long time to be waiting for these trades, but you can see in between all this price action, stocks have done absolutely nothing. There hasn't been a good swing trade. At the moment, increasing volume, it really looks as though we're going to toy with that 100 simple moving average, or at least come back down to the support levels taking place around $100 a share. That would be a very good target. It's a 10% move, 110 down to 100. Again, don't go out and place this in a real trade if you have no idea what you're doing. Personally, I like other trades on our Pivot Point Pro analysis list, which I spoke about over the weekend. You can go and have a look at that class, but you can definitely see the reversal starting to take place in a lot of these individual trades. It hasn't translated through to the overall markets at the moment, but they're certainly suggesting weakness and broad market weakness continuation as well. On top of that, we've also got minimal divergence or a small amount of divergence. Price did technically make a higher high relative to the late February high. It failed to do so in early April, and once again, but I mean, this is definitely weakness. It's true exhaustion taking place on a lot of stocks. HD is one of those stocks which just shows it the most, and it comes up very, very nicely. What I'd like to do finally in this video, I know it's been a little bit long, but that's okay. It's just reference Gilead. Gilead's been a little bit choppy. It's been one of those stocks which has been a little bit wild, and that's fine. You get these stocks from time to time which move a little bit erratically, and what I mean by that is it sort of pushes the boundaries of the lower limits. We didn't get into this, by the way. We had a 95.13 bearish entry. We came very close. If I can just zoom in, to begin the month of April, we came very, very close. Look at this candlestick right here. But this is exactly what we were expecting based on the support level over here. Now what we did was essentially we rallied back up. We started to maybe break above some of these swing highs. But you can see that we've got a shooting star candlestick on the Friday. We have a spinning top on the Thursday, inside day on the Wednesday. It's just looking quite weak after this nice bullish pop on the Tuesday, going back to last week. Now, looking at this also, it looks like we could have a bull flag, which will resolve itself to the upside. So this is opposite of the target setup, which I just spoke about. So pay attention to that on Gilead. I'd love to give you a legitimate trade setup on this, or at least a virtual trade setup. But unfortunately, on Friday, I believe, or it might be Thursday actually. It is Thursday. Thursday we do have earnings. So, I mean, Tuesday and Wednesday, you may be able to eke a trade out of it. Personally, I won't do it. I simply won't do it just because time is going to be a big factor working against us in this particular trade setup. But have a look on Friday and see where we gap to on Gilead. I'd be very surprised and very interested to see this gap higher based on this type of price action right here. I mean, we are starting to break above it, which is interesting, but it's just looking quite weak. One important thing to note down at the moment is that when you see divergence, when you start to see these reversal chart patterns, technically speaking, it more or less gets thrown out the window once earnings is reported. The reason why is because sentiment and I guess the psychology of traders and investors trading a stock changes in that split moment, and really it just takes a little bit of time for the technicals to reflect what the next or what the new sentiment is on that stock. So that's why we use gap theory and really the discussion, exhaustion, continuation, breakaway or reversal gaps. It's what's most important when it comes to earnings. So I'll leave it at that for this Monday afternoon. The previous video, the audio didn't work all too well, so I think it actually recorded from the audio on my MacBook Pro, not my Yeti microphone, which I'm speaking into right now. So this should be a little bit clearer for you. My apologies for that. I will close down this Monday afternoon trade setup recording on these 4 individual stocks. If you have any questions, email me success@pivotpoint-trading.com. Outside of that, have a great Monday evening. I'll see you all probably Tuesday for another market recap. All the best, traders. Goodbye.